Good evening, everyone. This is Tony LaPorta with simplerfutures.com. This is the free video for Payroll Friday. Don't lose your ass on a Friday. Anyhow, I want to point something out to you on this Euro Bund continuation chart. I mean, we've seen this market basically after we traded above these moving averages, it stayed above the 200-day. The averages closed here, and this area here. This is February 2014. The first test is March 2014, but the market stayed above this level and climbed all the way until Bill Gross made this call when the market came off. And then the market came off hard in 4 or 5 days, did a little bit of this, and then came off further. Fast forward, these moving averages cross, then they cross again, and we're off and running for another move. The point I'm trying to make is, you see all the air in here in between these two moving averages. We have the same thing here. We've had this move down to here. We've had this move down to here. Most of the move actually came on the rollover. And now we're hugging this 200-day moving average. Today, you can see that we closed just below it. Yesterday we closed on the 200-day. Today we closed below it. And this has me thinking that we're going to see a nasty little, because we know they've all got it. And the U.S. Treasuries are leading lower. The bond market, is already testing these lows down here, darn close. These lows in the bond market are 164.13. Today's low is 164.30. And I think we are going to see a race for the exits. I was thinking it would have happened last night, but it didn't. But we had a weak close here today, and it may just, the way these U.S. Treasuries went out today, we may see a race for the exits tomorrow while we sleep. I mean, we could go into payrolls tomorrow and the bond market could be up 160. Where is it trading right now? 165.04. The bond market could be 164.5, 164. So the old story goes, especially with the markets, is if it can go wrong, it will go wrong on a Friday. And I just have a funny feeling that we're going to see some sort of weakness here overnight, and which is going to drive our bond market lower. And then if we get a really good number tomorrow, they all go down big. And I'm going to put up one other chart. This is the continuation chart with the rollover gaps. This is just the normal chart. And you can see, I mean, this is a good move now. From this close here, we've got one. These are lower closes. 1, 2, 3, 4, 5, 6 lower closes in a row. And the nature of the beast. We could take back some of this tomorrow before payrolls, and then if payrolls come out better than anticipated, this market could easily. We take out this low here. You got to go back all the way to here, which is June. The middle of June. That means if we take out this low here, we're trading at 4 to 5 month lows. And we were just trading at new all-time highs the end of last week. So the old story goes, never underestimate the power of the bear. And the second old story goes, it's October. And I don't care if we're talking bonds, bunds, or the stock market. These markets can go down in October, and they can go hard, and everyone knows it. So be careful tomorrow. This is Tony LaPorta with Simpler Futures signing off.